It's Aaron Levine with my good buddy, Evan Beach, Equity Prime Mortgage. It's our Martini Monday or Vodka Soda Monday market update. And, with everything going on in the real estate market, with interest rates all over the place, I figured, let's grab Evan, have some lunch at B2 Bistro here in Point Pleasant. Can't wait to dive into my hot honey chicken sandwich. You have the burrata salad, a little bit of sushi. Abby over there has a margarita pizza, which smells phenomenal. And figured we'd just get some updates out there and help stimulate this local real estate economy right now and get more people buying houses, right?
Yeah, absolutely. Well, thank you for having me. I'm honored to be here. I feel like
you get to buy lunch. I don't know if you got that part of the memo, but I
didn't know if this is apparently I'm buying lunch. I don't know if this is an intervention for drinking too much over the holidays. Maybe, I don't know.
Dry January is officially over. It's we're done with that. I watched Tito's Vodka posted this thing of Martha Stewart did a video with Tito's Vodka, and it was hysterical, and it was all about dry January. But it was for Martha Stewart. It was DIY, do it yourself January. And she was using vodka around the house, and then at the end of the video, she has a martini and says "fuck it." So
how clever.
I thought it was pretty brilliant. One of these days, I'll be clever like that and do a cool video. But for now, I'm stuck with you, Evan. Man, and we're going to talk about mortgages and real estate and insurance and all that good stuff, and then we're going to get to dive in to our lunch. So.
Awesome.
You've been in the mortgage business you're a mortgage professional.
Long time. Yeah. Mortgage professional. Yeah. I've been in the business for over 15 years now, probably. Started in the wild, wild west days in 2004, where it was just zero regulation whatsoever.
The good old days.
Good old days. Yeah. If you had a pulse and could fog a mirror up, you were getting lent $500,000. And that was the problem of what happened in 2008. So
yeah, I think I've told you the story, and I've probably told it on camera before. My first mortgage in 2006, I never looked at the application. I just signed it.
Yeah, I know. Yeah.
So 10 years later, or maybe 5 years ago, whatever, I found my original mortgage document. I'm not going to mention names of the C-wide mortgage company, but I looked at that application. I'm like, wow. I made a lot of money in 2006 because everything was "quote unquote" stated at that time.
You said that you made a lot of money.
Somebody else said that I made a lot of money, but I signed it, so I guess that means I said it. I don't know
exactly, and that was what was going on. Unfortunately, that was what led into the big problems of 0809 was it was literally just, hey, Mr. Jones, see that you make this. Well, I see that you make this.
Yeah.
So we're going to state that you make this.
Not in smile.
Yeah, there's just zero regulation. But, we're on the other side of the coin of that right now. And, underwriting is strict now, sure, as it should be. I mean, if you're going to go and typically make the largest financial transaction you're going to make in your life, it should be highly regulated. If you're going to go and try to borrow,
should be,
hundreds of thousands of dollars, you should be educated on that. You should know what it means, and you should be able to repay. The ability to repay is our job. Yeah, is pretty important. That really leads us into kind of how we operate and what we do. You mentioned mortgage professional. That's what I call myself all the time, but. Our kind of plan in the market or niche in the market, I guess, is the fact that it's wild because everybody has something, has a person for things in their life, right? You need a mechanic, or your car breaks down, you need a mechanic. You have a mechanic you typically go to. You need a hairdresser.
I can't go online and get my car fixed? Is that what you're getting at?
Exactly. You need your haircut. Not me, I get it, haircut jokes. You have a barber or hairdresser that you go to, right? But when people start kicking tires and looking around and potentially hey, I want to buy a home in the future, most of the time people know a realtor, but when it comes to mortgages, they start Googling, which is a terrifying place to go and try to get educated on the largest financial transaction in your life. And there's a lot of misinformation, disinformation that's out there. So
I have to parlay that into when you're Googling for insurance and doing the same thing for your insurance to protect the largest investment you're ever going to make in your life. Working with an insurance professional is obviously key. But back to you, Evan.
Yeah, no, you're 100% right, and I think that goes for a lot of different things in life. Like, you need to understand what you're doing, and that's really kind of our major niche in the market is educating clients and doing proactive lending, basically.
Right.
Is making sure that people understand the process, they understand what it means to borrow hundreds of thousands of dollars.
Right.
It's funny too, because I always am bitching about student loans, and I think it's a huge plague on our country. And it's kind of somebody can lend you 100,000, 200,000 in student loans with zero expectations.
We're going off the rails here.
But but here we are trying to do
it's another topic for another
do
day.
the right way, exactly. But yeah, so that's really kind of our business model, is to educate people and to be proactive about what they're trying to do if and when they try to buy a home.
You're always talking, in our groups, in our social circle, in your professional setting, right? That anybody buying a home should be talking to their lender, their mortgage professional first before the realtor, which is never the case, because people are on Zillow or shopping wherever they're shopping online. They see a house, they either send it to a realtor they're working with, or they send it to their aunt, or wherever it's going to go, and they think they can buy a house but have no clue what the money is going to cost them, right?
Yeah, absolutely.
It costs money to borrow money,
right?
And nobody knows what they can really afford to pay. They think they know what they can afford to pay,
exactly,
but in reality, it's typically a little bit less than what you hope you can pay.
Absolutely, and it's no different than really anything else in life. Things in life cost money. Like life is expensive.
Make sure we get that one.
Yeah, exactly.
Life is expensive.
I'm gonna trademark that as soon as we leave here. But
put that on a T-shirt.
But it's like anything. I mean, if you're like, hey, I need a widget to do this, you need it, then you're going to go and look online and see how much it costs.
Right.
And it's kind of the same, exactly what you're mentioning with people like, hey, I want to buy a house. I need to buy a home. I want to move. I don't want to rent anymore. They're going to go on Zillow. They're not going to be like, hey, I need to buy a house. Oh, let me get a mortgage first. When in reality, that's what they should be doing. Anytime anybody...
You've yelled at me how many times for doing that?
Exactly.
I'm guilty.
Yeah,
like, hey.
you are the prototypical, hey, there's a shiny new toy. Let me go get that and then try to figure it out.
I just bought a new car, but I'm going to buy a new house next week. It'd be cool.
Exactly. But yeah, no, you're 100% right. I mean, my kind of little joke or quip that I say to people all the time is like, anytime somebody asks me when they should be getting pre-approved if they're looking to buy a house, my answer is always yesterday.
Right.
Like, you just can't do it early enough. If somebody tells me, hey, yeah, I'm not looking till the spring, or I'm not looking till the fall, or we have this life event coming up, we're getting married, so we're not going to look till after the wedding. It doesn't matter. Like, you should be talking to a mortgage professional immediately. And at the worst case, you figure out a plan,
right,
and a roadmap of what it looks like to borrow money when you're ready to borrow it.
Right.
So this should always be very proactive about those kind of things, because
understanding
there's a lot that
the process and the opportunity is huge. And the more you can educate yourself or work with a professional, you're going to understand the roadmap and understand what you should be and can be looking at when it comes time to, whether it's a year from now or 6 months or 3 months, right? Like, getting that financial education, right? And I see memes all the time about, kids learning about stupid sex ed stuff and not learning about taxes and finances.
Not learning,
right?
Exactly.
Like, I'm not even, that's another off the rails topic.
100%. Yeah,
right up my young student children, loan. So we're going to be dealing with that nonsense soon enough. But where are we in the market right now, right? So 2022 was an interesting year.
Awful.
We came off of some wicked highs, right? The velocity was huge, and then it fell off a cliff.
Yeah.
Right. Mortgage rates went up to a whole 5% at one point, and I don't know where they sit today. I'm not paying attention. But where are we at today? Where do you see things trending? And what's the advice that you can give to somebody that's looking today and be like, oh, I'm going to wait. I'm not going to buy because prices are high, interest rates, blah, blah, blah. And people just continue to sit on the sidelines, right? Mm-hmm. People aren't selling. There's definitely a shortage of inventory out there, but if you're in a position to buy, you should still be actively looking to buy within your means, and then figure out how to trade your mortgage when interest rates go down again, or trade your home when property values change or your life needs change, right?
Yep.
So where are we today, and where do you think we're going to go over the next, your crystal ball?
Yeah.
Like break out that magic 8 ball and see where it's going.
You hit on a lot of topics there. So do we have like another 45 minutes to an hour?
You got like 97 seconds.
I like how you mentioned.
I'm like smelling bacon here, and I want to get into it, but
I like how you mentioned trading homes like you're playing Monopoly. Like I like how you likened it to that. That was I saw it. It was very subtle, but yeah, I mean, we're coming off of the 3 consecutive of the wackiest years you will ever see in real estate. We're probably never going to see that again in our lifetimes. Okay. I mean, we had a historic event at the beginning of 2020. I think people remember that. I forget, but which then led into historic low interest rates for the time at the end of 2020 and increases in equity. And then I say historic low interest rates at the time because then in 2021, we saw again historic low interest rates in the middle of 2021. So we're coming off of 2 crazy years in 2020, 2021, where money was extremely cheap and houses were double-digit appreciating year over year, 2 years in a row, which is never the case. Average appreciation should be like 5%, 8%, not 22. Like that's not a healthy market. As fun as it is, and I know you love it.
I love it.
You're gaining all the equity and you're trading homes and things like that. But then we hit 2022 and it was like the polar opposite of 20 and 2021. We saw a historic spike. Rates have never jumped like that in the history of mortgages. We've never saw rates go from in end of 2021 where rates were in the low 3s, 3.25. And by the middle of 2022, we were scraping 7%. And I had a few mortgages that
150% increase.
Yeah. And I had a few mortgages in the middle of the year that were 7.25, 7 3/8, 7 1/8. That's where we were in the middle of the year there. So it was just, as you can imagine, my job became very difficult and challenging in those times because you had people that were looking at homes in January.
That's what martinis are for.
Yeah, exactly. That you had people that were looking at homes in January, February that were in a certain price range and had the ability to repay a loan at this purchase power. We never really focus on purchase price. We focus on payment because that's ultimately your purchase power. But
you hit on a good word right there. Payment. All right, keep going.
But it went into somebody's had a max payment they could go to, and that got them $400,000 in January, and then it backed them down to $300,000 by the time it was May. It was wacky. So, and then you had the tail end of the year where people realized, okay, rates have gone up, which means now we're flipping the market more towards a buyer's market, where it was an insane seller's market for a year and a half, 2 years, sustained. I mean, we had sustained low interest rates for over a year and a half, which is just wild when you think about it. So, yeah, I mean, now we're in a completely different market. You asked as far as what you recommend people buying houses. I mean, to me, it never makes sense to wait to buy a house.
I agree with that.
And you can look back over the last 20 years, 30 years. It never makes sense there's not a magic bullet that's going to come along. Property values aren't going to dip 30% next week, and it makes sense to buy a home.
Even if you buy your home today, you're making your payments, you like where you live. If your property value goes down 20%, your payment doesn't, and you're not selling it. Right? And at some point, that equity is going to come back unless you're trying to trade your home right away and you made a bad bet, but that was a different type of decision. Right? It wasn't a living decision. Like, I want to live in a community, I want to live in a neighborhood, I want to own this home and grow my equity, so to speak, by paying down your mortgage, right? Trying to trade homes is a whole different kind of game, but living in your primary residence gets you so much more, and it's all about being able to make that payment.
Yeah, 100%. And it's funny you mentioned trading homes again, but like you're only realizing depreciation or loss if you actually sell that asset at a loss. And I tell everybody the same thing. People are freaked out about, oh, what if the market dips? What if the market crashes? Well, first of all, there's way too little inventory, especially in New Jersey, for the market to quote unquote crash.
Right.
In my opinion. Now, are we going to see a correction? We've already seen that.
Sure.
Where properties, that were listed at 400 aren't selling for 480. They're selling for 400.
Right.
Or they're selling for 410, or they're selling for 395. So we're already seeing the correction.
Sure.
Now, are we going to see a depreciation of homes? I don't believe it's going to be anything significant. I mean, can we see a 5%, depreciation or 10%? Sure. I mean, anything's on the table, but like you hit the nail on the head. Like if somebody's buying a home to live in, and unless they're an investor in flipping homes,
right,
which is very difficult to do right now in this market, if they're going to be living in that home, and they're going to be there for a certain amount of years, and it goes back to the planning question, because that's one of the first things I ask people is, hey, what's your plan? You buy this home next week. What's your plan for it? Is this a starter home? Are you going to, raise your family here? Do you have children now? Are you going to be there for, what's the time frame? Are you there 5 years? Are you there 10 years? Are you going to be there till you retire? All that stuff's very important, because somebody tells me they're going to be there 5 years, 10 years. Not to be brash, but why do they care if the market dips 10%?
Right.
Because it's going to come back in some fashion. So unless you're like, hey, Evan, I'm gonna buy this condo and I'm gonna live in it for 18 months and then I'm out of there, then okay.
And we're not borrowing money at that point.
Yeah, I mean, if that's the case, then that's fine. But I would still argue that you're going to be in a better position from buying it regardless,
right?
Because you're going to pay down. You're going to pay down the equity in the property through a mortgage. You're going to get tax benefits through a mortgage. You're not staying in the rental hamster wheel.
Right.
You're not. There's always going to be benefits to buying, in my opinion. But
says the mortgage professional, when you buy your first home, your washing machine breaks, your dishwasher breaks, toilet breaks. You're like, damn it, I wish I was still a renter.
I mean, look, I'm very frank with all of my clients when I first talk to them.
Everything breaks.
I know.
Everything breaks, right? Like,
but
I just had to replace my washer and dryer. $3,000 on my American Express. Like, hey, it's not what I want to do. But hey, that home inspector that I use, that's another conversation.
Hey, my heat broke a couple weeks ago, and we mentioned his name, but
Matt, we'll get you, Matt. You're coming for lunch next time.
But I had Matt Williams at my house, and there's an unexpected expense. So that goes back to the planning aspect of it too. Because anytime I'm talking to a client initially,
right,
and they're like, "Oh, I have 10% to put down. I have 20% to put down," and I go through this, I'm like, I'm not allowing you to put down 10% or 15 or whatever, and I don't want to leave you $500 in your checking account.
Right.
Like you need to. Owning a home is expensive. I mean, that's just the nature of it. You're responsible, like you said, for once you take ownership of that property, you're moved in there. It's your responsibility.
That's also the beauty of the market we're in right now. Creative financing, and I don't mean creative like cooking the books creative. I mean like using government programs and lending programs that are out there and available, which kind of were shunned during the peak market years when people were coming in with higher down payments, waiving inspections, not using FHA, not using VA.
Mm-hmm.
We were talking before we turned the camera on about people doing some renovation financing, some home style lending.
Yeah.
Right? There's opportunity to use programs and creative mortgage opportunities, right?
That weren't even
that you couldn't do a year ago.
You could not do it a year ago.
Can you tell me about somebody that's borrowing money, buying a home, financing the home, and also borrowing money to do renovations to the home?
Yeah.
Also.
I mean, I would
say
say
do that a year ago.
No, and that's why you asked the question earlier as far as like the state of the market and if it makes sense to buy now. Like in my opinion, it's a healthier time to buy right now than it was at this point last year or at any point really in 2021, especially.
Right.
Because you can somewhat negotiate the price a little bit more. There's not as big of a buyer pool. You're not seeing 25 people lined up to go to an open house. You can negotiate home inspections now,
right,
whereas in 2021 it was laughable. It was like
right,
as is. No, we're not taking anything. We're not doing seller credits. We're not fixing anything. It's take it or leave it.
Sure.
You can have the ability to negotiate if an appraisal comes back light, which is they were always asking people to waive it in last year.
Yeah.
So I think it's a much healthier time to buy a house right now, regardless of where interest rates are. I understand interest rates are a piece of the equation.
Right.
But you hit the nail on the head too. Again, man, like there's FHA, VA, all those programs were not being accepted on homes last year.
Right.
Last year it was like a bidding war, and if you didn't have 20% or cash, like you were not even considered.
Right.
So first-time home buyers last year were out of the market, and now they're back. Like
Right.
first-time home buyers are in vogue right
That's
now.
awesome.
You know, and I have a ton of people that have gotten offers accepted over the last month, 2 months, that were on the sidelines for a year and a half.
Right.
And regardless of how much they tried, they were not having offers land because sellers did not want to accept low down payments.
Sure.
Because they knew it was going to be an issue appraisal wise.
Right.
Because they were just asking astronomical prices to begin with. So I think it's a healthier time right now. And ultimately, I can educate people and go through the whole process with them and show them charts, graphs, and do everything till we're blue in the face. But if you're not going to have an offer accepted,
Right.
all of it means nothing. You know, like that's the name of the game is like if you are out of the market and you can't have an offer accepted, who the hell cares what the interest rates are? Like honestly, like I could tell the interest rate's 1%,
Right.
but if you're spinning wheels and you can't even have an offer accepted on a property, what does it matter?
We've had that conversation during my buying processes too.
Totally.
You're like, don't worry about the interest rate. I'm like, what do you mean? Like, don't worry about it. You know, it's going to be what it's going to be, and we're going to get you the best rate we can possibly get, and we're gonna make sure everything is tight and good to go.
Yeah.
So I'm going back to the payment piece of it, and this is one thing that you do much better than most other mortgage professionals that I deal with, is making sure that the payment is correct, because a big piece of the payment is that escrow payment that goes out in the mortgage payment.
Yep.
And a part of that escrow payment is the insurance payment. We've seen so many changes in the insurance marketplace too, where costs of insurance have gone through the roof in the last year, and this year they're going up by another 20%. So we're seeing things, and
Not mine though.
not yours. No, you're good.
Okay. All right,
no,
cool.
he's actually
All right.
in big trouble next month.
Is this what you brought me here to tell me? Is this part of the
This
intervention?
is the intervention piece of
Oh,
it.
man.
You know, so we're seeing, so we're properly educating people on replacement value of their home, right? Because the cost to rebuild a house is, 30% more than it was 2 years ago. So we're seeing that level is changing a lot. Plus the actual cost of insurance is gone up about 20% also. So we're seeing things that 3 years ago might have been $1,600, $1,700, $1,800 are now $2,600, $2,700, $2,800 for the same exact insurance policy, right? So we're doing the best that we can do to stay ahead of that.
Try lending in Florida.
And forget about that. We've had those conversations.
Yeah.
And Florida's uninsurable right now, unless you go through Citizens, who was just approved for a 60% rate increase. But getting ahead of making sure the numbers are in line with taxes and insurance, flood insurance, and everything that goes in with it, things are changing. And if we get a good rate today, it still may go up by 20% next year. Same thing on the flood insurance. We always warn people, because we do a lot of private flood. We're getting good rates on the private side. But if we get another big, nasty storm, right, that private market goes away. We're stuck in FEMA. You can have a several $1,000s rate increase on your insurance. So having those conversations so that people that are buying understand what they're buying. And I hate people that buy their first homes on or near water. So I'm like, hoping nothing ever happens, because flood insurance is not the best insurance out there, because it only covers the rebuild, doesn't cover your loss of living, your loss of use, which is a big piece of it. Yeah. Like when I bought my first house, my wife and I had a conversation. I said, look, if we get the flood because the water was in our backyard and we can't live here, we can't afford to live somewhere else. It means you're going to your mom's, I'm going to my parents, and we'll figure out what to do with the kids later.
Yep.
That was the conversation we had to have. And that's a conversation that I have to have with people buying their first primary residence in a high-risk flood area, because things can certainly happen that are, could make it bad for you. So understanding the insurance that goes into it is super important. And you stay ahead of that process very well.
Yeah, it's
to make sure people understand their payment, but also, I talk about the risk. He's worried about the risk of the payment, which, incorporates all the insurance stuff. But we want to make sure that people understand that if there's a flood, you may not be able to live in your home, or you're going back to your parents' basement.
Right. Yeah, and it goes back to just being proactive as far as educating people on what their payment's going to be, on what they
Right.
can't afford. I mean, if there's a client that has a very tight debt to income ratio, and I'm an idiot and I'm like, hey, Aaron, this guy needs a policy. It's got to be $60 a month. That's cool, right? And you're like, dude, policy's not going to be less than $150 a month. That can knock them out of qualifying for the deal. So we have to be. It's got to work together. You know, it's like the hashtag who you work with matters, right?
It matters. That's right.
Because I need information from you about, hey, where are we with this? Like policy wise, like what are we looking at from a homeowner standpoint estimate? So I can accurately be like, all right, hey, Mr. and Mrs. Jones, your payment's going to be here. And we can't go over this payment or else you do not qualify. Like it's that straightforward, especially when you have a spike in rates like we did. But I always try to educate people too. Like as I'm going through this, like they want to break down what's in the payment, and homeowners insurance is part of it. And I always have to explain to them, like insurance is just like homeowners insurance is a lot of other insurance. You know, like if you want, you know, bumper to bumper coverage and very low deductible, your premium's going to be high. And so it's same thing with, you know, trying to price out mortgage rates. You know, you can go and Google mortgage rates or Google insurance rates, and you'll see bottom of the barrel, like minimal coverage.
Evan,
you know, like
why is this rate so cheap compared to the one you're giving?
Yeah, exactly. Yeah, people need to understand that
because there's nothing built into it, and they're going to charge you on the back end, and you're going to get screwed later.
Oh yeah, sure. Well, Mr. Jones, we'll get you that 5875. It's going to cost you $14,000 in fees and points to do that, but sure, we'll get it for you.
No big deal.
Yeah.
On that note, speak to your mortgage professional, Evan Beach, Equity Prime Mortgage. I'm hungry. I want to get into my sandwich. Go buy a house. I mean, it's as easy as it is, right? Like
that's it.
If you're on the sidelines, don't hesitate. Speak to Evan and really have those conversations with your local professionals, with those that are going to work with you and have your best interest in mind. And you're going to be well taken care of and be put at ease. So cheers to a good 2023.
Yeah, absolutely. Thank you for having me.
Thank you.